All right. Hi, Keith. Horses in a real estate, believe it or not, there are two big cities who are doing very well. And most of you will not believe it. What are those two cities? Quebec City and Winnipeg have 11% appreciation. Wow, wow, wow. And Toronto and Vancouver, I think they're in a deep freeze. And we shall see how are they going to come out. A lot of foreclosures, a lot of power sales, a lot of defaults. As a matter of fact, a lot of defaults in Calgary too. Quite a number of defaults. Even though Calgary not do well, Edmonton is doing very, very well. That's what I heard. But again, rentals have been declining for the last 15 months all across Canada, the prices. And now the tenants have a little upper hand. We also have something tonight. Hopefully, VJ can join us. That is about the Bill C-60. What is it all about? And we have expert in his company called Evictions Canada.ca. He's a lawyer. He worked for a while with Landlord and Tenancy Board as an adjudicator for a year or so, and hopefully he can join us tonight. So let's get going. Just to let you know about our business, real estate is a fun business, and you need to have a lot of knowledge, a lot of experience. Otherwise, experience without knowledge, it's painful. A lot of people get caught with fear of missing out, got too much investment, borrowed too much money, and they can't finance it. And one of the worst scenario is a lot of people who need to refinance next year, about 1 million Canadians, may not be able to qualify. So they might have to go to B lenders, private lenders. So private lenders are having a great day because they're able to start somewhere from 6, 7%. And a lot of banks are refusing them altogether. So, well, we will talk more about it as we go along. And we're going to bring our a little request. Those who have not joined Habitat of Canada, you can donate $5 a month for next 12 months. They need your money. If you are able to volunteer yourself anywhere in Canada, you can. And please use their reuse store if you want to buy any building material. Or also you can donate leftover material and they will give you a receipt for it. Why waste material when you don't have to do? I've been a super fan of Habitat of Canada for a long time. So, Canadian real estate, extreme fear. Why is that? Is it bad news? To me, it's a great play time to invest. It's a dip. You can pick up the prices of your choice, owner financing, and a lot of choices, uh, and a lot of people who need to get rid of it. If it makes sense, it has a positive cash flow, you can handle it for a long-term basis. I believe this is a good time. Please talk to Randy Goodman about it, and she can perhaps help you with a lot of opportunities, though. So we're talking about is buying a home in Canada becoming impossible? Yes, because you need lots of income. That's only to big cities, but again, in general, it is difficult to buy a house, and there's something else going on. So who's hiring the most? Who's hiring? We are creating most jobs. Believe it or not, Government of Canada is all public sector employment, and it has gone up dramatically. By the way, those who want to look into it, you can go to Fraser Institute, have a look at it, the chart. You'll be surprised, and that is these people are getting paid by your tax dollars. 950,000 jobs. That's a lot of jobs. So the arrears, delinquency rates, whatever you want to call it, it is going up dramatically. There are 1.15 million mortgages need to be renewed in Canada. Their interest rate, they used to be like 1%. They're going to go from somewhere from 4 to 6%. And there's going to be a lot of casualties, in my opinion, though. So, what's the biggest problem? The inventory is rising like crazy, and there are not enough buyers out there. I guess we all know that. Okay. Why is it going so fast? But there is some forecast about that next year, and we'll be talking more about it. I do believe the prices may gonna go down in a couple of cities. Another city, they're gonna do very well. And we're gonna exploring it in January 13th session altogether, step by step, though. I'm gonna have Vancouver rental, believe it or not. Would you like to rent one bedroom, one bath, $2,800? Guess where the bedroom is? You believe the where bedroom is? On top of the tub and is advertised. What does it tell us? It tells us that there's still a lot of shortage. At the same time, there's a lot of surplus, but those are expensive properties, which a lot of people can't afford. They don't make sense when you rent them out, though. So rents are up in case you are planning to build something. One of the recommendation came from different sources. In case you want to build one bedroom, two bedroom, three bedroom, the best bet is still at three bedrooms. But again, the things are changing. Again, if you like to have a quick look at the chart, please go to cmhc.ca, check it out, where you can expect much better rent for long-term basis, though. If you're investing in a multifamily, or if you're converting single family into 5 units, 8 units, or even 50 units, by the way. Power sale. Boy, boy, boy. Terry, are you there, Terry?
I'm here. What do you want me to tell you about power sales? They're fun.
You tell me. A lot of fireworks.
They just keep going up. I think they're going up for another year still.
I do believe so. I believe that a lot of people are hoping, and unfortunately, power sale process much faster than typical foreclosure process in other provinces. Ontario, I believe, has more power to the lenders. They don't have to go to the courts as often as other ones have to be. But there are a lot of power sale properties in the market for sale, and they've been sitting in the market for more than 60 days, 90 days. And the lenders are saying, hey, listen, I want to do the fair thing. Here's the latest appraisal, and appraisal value keep dropping, and some of these properties are not moving. Are they good buys? Depending on a property, every property in Canada, whether it's a power sale or foreclosure, must be sold at fair market value. Again, subject to the condition of the property. And whenever you're buying this type of properties, power sale properties or foreclosure properties, you're buying it as is, where is no guarantee, no warranty, because the landlord never owned the property. They're unloading the property to safeguard their investments. All they're doing is pulling their investments out. And there are some do's, some don'ts. A lot of people like to work with the lenders. It's much easier. And in case you are missing a payment, if you have skipped a payment plan, if you can work it out, something's much better than going through the process, though. Terry Walton, I got a question for you.
Yep.
How often do you see a quitclaim deed when people are defaulting and say, okay, please take over property, I'm ready to sign a quitclaim deed?
Very infrequently, but we are seeing some of those. In the 90s, we definitely had people physically coming in with their key, signing off, and walking away. And I've seen a little bit of it now, but most people these days, 20 years on, 30 years on, they just don't understand. They stay in that property as long as they can until the sheriff comes.
Interesting. You remind me about a term called zombie foreclosures. And this is only applicable in Alberta. Alberta is the only province in Canada when you default, they can only come after your one property. It has to be residential. It cannot be commercial. I do believe that this law still applies. They do not come after other assets. And the rest of the provinces, especially in Ontario, if there is a deficiency, they will come after you, go after your other assets, even go as far as garnish your wages, if possible, or they're going to have a judgment which could be good for 7 years. Is that correct, Terry?
Correct. Well, the judgment lasts forever, but the
I know.
writ at the sheriff's office lasts for the 7 years.
Excellent. All right. So this is a power sale process. Let me just share some of the stuff. Uh, this, number of power sales up is dramatically. It just the fact is, oh boy, it's gonna be continuing for a while to come, in my opinion. I do believe terracing about a year. I would say about year and a half or 2 years, because next year a lot of mortgages going to renew. People are going to have difficulty paying up, and there will be more defaults. That's my opinion. And again, I could be 100% wrong altogether. Just an opinion only. So this is a another piece of property. Anybody know the Drake? You know where he lives. So this piece of property in the power sale. I believe they bought this property for 14 million. Sorry, no, they bought the property for. Oh, I'm sorry, 20. Well, they bought the property for how much? I'm sorry, 13 million. Now it's under. They're trying to get it for $30 million. Now it's under power sale for 22 million. And again, who said that the rich people don't go broke? It happens. It over leverage, in my opinion. I'm not sure who the lender is, but this was quite a bit in the media, by the way. Uh, just thought I'd just share with you today.
So interesting. I have one property on Bathurst Street up in Vaughan that was on 4.5 acres, massive house, new build, listed it for $34 million, reduced to 32, reduced to 28, to 24, to 21, to 19, reduced to 17, not a bite.
Oh my Lord. And what is the current appraisal on it?
Well, who knows what the appraisal is? The Royal Bank has a $5.5 million first under power sale. There's a Russian private lender, three and a half. No, three and a, yeah, 3.5 as a second. So you've got nine million against it. But who's buying it?
What kind of property is this?
A house. It's well,
Oh, all right.
you can call it a house. I mean,
Okay.
this mansion in the Bridle Path looks tiny compared to this one on Bathurst Street.
Well, hopefully the Canada will open the door for foreign buyers to come in and start investing. That could be a good solution for us. Don't you
Yeah,
agree?
yeah. You bring a whole country that can live there.
Yeah, a lot of people from China, Iran, other countries want to save put the money here safely in Canada. That might help. Unless otherwise, in BC they are adding up all kind of different taxes on foreign buyers and flipping taxes and whatever. And our mayor Chow also want to introduce wealth taxes property over 3 million as well. If she
Is
want to
that
increase it.
what it is? The she's increasing it by another percent on the or on
Yes,
the 3
as
million
of
plus.
yes, it is in the council right now. They're discussing it to the best of my knowledge, and she is proposing to increase it dramatically, though. Well, that does not help other people come in. This is another property. It was big publicized, and everything went upside down. This was King George Boulevard in Surrey, BC. The builder advertised it. Hey, you can buy it for a 25% discount. And again, uh, out of 40, I think 25 units got sold, but eventually everything went under, and it's under the bankruptcy or receivership sale now. I do believe the builder himself is also bankrupt as well, though. They tried very hard, but again, nothing happening there. So BC, Vancouver and Toronto, the condo developers are in trouble now. There, nobody want to build any more condos. They want to build rentals only. And I think 3 to 5 years down the road, we can have a huge shortage of condos and brand new houses right now. In my opinion, again, because this inventory will eventually dry up too. So the number of properties under power sale, the highest numbers are again in all over the places. But again, this is something we should be careful with. Okay, so delinquency highest in Toronto compared to Vancouver, compared to Canada. Again, this is the chart from I believe from RBC, but as well as from the Canadian Banker Association, that there are so many people are behind. So right now, as we speak, about there were 1,021 properties under power sale listed on MLS, and there might be hundreds of them which are private. Do you ever put all the properties on MLS, Terry?
Sorry, I was
Do
just
you do you list all those properties on MLS or some of them?
they should be listed on the MLS, whether you sell it privately, arm's length, non-arm's length. They should be listed.
All right, just thought I'd check with you. But altogether, again, it's very difficult to track it down. But we have few other sources where we are able to believe that there are 1,021 properties as we speak for power sale in Toronto. So private lending is in the rise. Why people have no choices? The bank saying sorry, and you don't meet your criteria or whatever. If you are shifting from one bank to a second bank, you have to requalify. And some banks can refuse to renew your mortgage. So what's your choices? Be lenders, private lenders. So what is the normal current rate, Terry, for the first mortgage on the private sources?
The rates?
Yes.
Rates on private first mortgages are anywhere from 5% up to 15%. It all depends on what it is and where it is and size, location, person, situation. I would say on first mortgages on a residential property in the GTA, the standard right now would be anywhere between 699 as a first for private, 699 up to 9.99.
And plus 1% lender fee plus the 1% broker fee.
2% lender fee, 1% broker fee, or 1.5% broker fee, 2% sometimes. There's a lot of brokers that are accepting 0.5% to 1% right now because they're just not enough business that they're getting and they just want to make the deal go through. But others are saying, no, we're in for 2% or we don't do the deal.
Interesting. A lot of self-employed. There are 2.75 million self-employed Canadians. Now they did renew it. And again, 13% of Canadians' workforce is self-employed. So that throws another challenge. And banks easily can say, no, thank you, and go for the B letter. All right. So what are we expecting in 2026? We will know even tomorrow what's the wording going to be from the Bank of Canada governor. But for the time being, this is what we expect. RBC, and CABC, they're holding 2.2, and BMO is saying 2%. But it all depends. I, in my opinion, based upon what I heard and whatever I know, interest rates are not moving either up or down for a while. And again, it can change rapidly depending upon if something happened with tariffs or anything happened with unemployment or we get something big on national level. Okay, so the wanted to bring this is the renewals. There's quite a bit of properties going to go renew. We'll discuss a little bit here. David is unfortunately away. He will be. I think he's dining and wining with some builders tonight. And we will skip this. Okay, so we're going to bring before I bring Jyoti in. This is a big question. This is not only happening in Toronto, Ontario. It's also happening in BC, in Richmond. It's happened in, I believe, not Kelowna. It's Kamloops, and this is a massive claim. As a matter of fact, one of the builder or one of the company, the lender refused to renew the mortgage. So, Jyoti, are you there?
Yes, I'm there.
Okay, great. It's all yours, my friend.
Thank you so much, Natash.
And we
Now,
also have Terry Waldman at the same time with you.
thank you, Terry. Um, as far as title insurance is concerned, I'd like to inform most of you would already know that there are two types of title insurances. One is the owner's policy, and the other is the lender's policy. And the question whether title insurance covers native land claims in Canada, that is a loaded question, but normally what I would say is it does not cover native land claims in Canada. What it covers is existing liens So if you have unpaid property taxes, utility bills, or mortgages from previous owners, which have been secured against the property, title insurance would cover that. It'll also cover fraud and forgery, meaning if somebody is illegally transferring or forging documents to claim ownership, it could cover that. It would cover encroachments. If a neighbor's fence or structure is partly in the property or vice versa and needs removal, that will be covered by title insurance. Then if there's a mistake in public records or in the survey, then normally title insurance would cover that as well. It would cover any unregistered right of way or lack of legal access to the property. And it would also cover unpermitted work, issues with outstanding permits or work orders. It would cover legal costs to defend your title against these covered risks. So these are the coverages of a title insurance normally, but it does not cover native indigenous land claims in the normal manner. The only way you can figure out if that is covered is you have to look at the exclusions of your policy, and normally you would find in the exclusions the native indigenous land claims. For most title insurance policies, that would not be covered unless you talk to the title insurance company and you negotiate with the insurance company to offer limited coverage if negotiations with the government are advanced or if the claim seeks compensation rather than land return. So this is a point that is to be negotiated. It is not normally covered, and these claims are normally a common exclusion in many policies. And protecting the owners against unknown title issues is a challenge, which is normally listed as an exclusion in the title insurance policy. The reason why they excluded is because they're high risk. Aboriginal land claims present complex legal challenges, making them difficult for insurers to price or cover under standard policies. So most policies explicitly list native land claims or Aboriginal claims as matters not covered. The only scenario which is rare, which can cover these claims, is if a First Nation is close to settling a claim and only seeking financial compensation, not land, an insurer might consider limited coverage. Or if there's special endorsement add-on, which can be negotiated, but this is uncommon for broad claims. So what you basically have to do is check the exclusion section for native land claims, Aboriginal titles, or similar terms. Inquire from the insurer directly if any endorsement is available for potential land claims in the area you're buying. The summary or the gist of it is you can expect your standard title insurance policy not to cover indigenous land claims, but you have to always verify with your insurer for specific details on your property. So this is a topic that may gain a lot of prominence if there are legal battles in the courts regarding this, and if there's a massive land claim in Ontario, as one is, told. So this is a point that needs to be talked about with the title insurance company, negotiated with the title insurance company, and only then you can, have some kind of coverage for these claims. The other point that I was going to talk today is what happens when land is repossessed by the Crown. What this means is that the land is repossessed by the federal or provincial government, the Crown, or one of its agencies has legally seized ownership of property and assets to cover a debt that is owed to it. This process is similar to a standard repossession by a private lender. So when you have a private mortgage and you don't pay that mortgage, then you have the private lender suing for power of sale to get his mortgage funds back. But here the government is the creditor, and the Crown has a prerogative of priority, meaning that its debts often take precedence over those of other creditors. So when is a when is the land repossessed by the Crown? Number one, if there are unpaid taxes, the CRA, a Crown agency, can seize assets, garnish wages, or freeze bank accounts without a court order to recover unpaid taxes. The second is if there are defaulted loans. If an individual or business defaults on a loan from a Crown corporation, such as the Business Development Bank of Canada, that agency can seize the collateral property used to secure the loan. If there are unpaid fines or assessments, other debts to the government, such as workers' compensation assessments or other fees, can also lead to seizure actions. So if in a municipal tax office for property tax areas, most private mortgages and liens are cleared from the title when there is a tax sale. But mortgages or liens held by the federal Crown remain on the title. The Crown agency could then still seize the property from the new owner to recover the outstanding debt. So these are the scenarios when the land can be repossessed by the Crown. And I mean, if you want to buy a property that is repossessed by the Crown, what you have to look out for is, of course, the title has to be searched extensively, as is normally done, but title is normally assured even in these cases. But the stigma attached with this property, that is the main challenge, and resale challenge, that is a bigger challenge. So these are my viewpoints on title insurance and what it covers and on repossession by the Crown. I hope that has been informative.
Excellent. I got a question for both of you, Terry Waldman as well as Jyoti. Some of the lenders feeling uncomfortable knowing the fact that their properties are undergoing under land claims, especially in Richmond in BC, as well as that happened a couple of years ago in Caledonia. What is your opinion on that?
Um, Maybe Terry would like to answer that first.
Well,
Terry?
thank you, Jody. First,
You're welcome.
I'm smiling because Richmond, BC, the problem out there is real. It's not a laughable matter. It's real, but it's a political matter. And as far as what I've read, the Indian bands are not looking to displace the people from their homes. They certainly will get something of incredible value from our federal government in exchange for them saying that's fine, we're hands off of those Richmond properties, at least the residential properties. There's lots of commercial properties. There's lots of federal and provincial properties that the tribes could say, hey, we want this particular piece of property and that property and that property, and they might get it to open up their own commercial enterprises there. But the residential properties will be left alone. The same thing with the this Grand River. You can imagine the government looking at all the people that live in Waterloo and Kitchener and Cambridge and Brantford and saying to them, okay, we're going to somehow compensate you because your house went down in value. No, the government's going to say there's a hands off. We'll deal with whatever we have to deal with the tribes to satisfy them. It could be giving them a stake in the pipelines, giving them a stake in something else, in the Ring of Fire up in Ontario, Northern Ontario. But it'll be a hands off the major centers along the Grand River.
In your opinion, those commercial properties, multi-units or condominiums or rental buildings, are they gonna that also spare them or?
No, no, I personally don't think they're going to be affected at all. Because it's just too much of a political hot potato. You have all these these stakeholders, these citizens that are voters, and no government is going to allow them to lose their properties like this.
Well, it's more or less, do you think it's all political stuff as well as to grab some money?
I think the Native Indians are going to have a field day with our federal government giving them more and more monies, land
Interesting.
somewhere else.
It's taxpayers' money. Is that correct?
It'll be taxpayers' money.
We all paying for it,
We all will be paying for it.
unfortunately. Well, all right. Thank you, Terry. Thank you, Jyoti, so much for your insight. Really
You're welcome.
appreciate it. And we are
You're
supposed
welcome.
to get this gentleman, Vijay. I'm not sure. Sorry. AJ. AJ, are you there? AJ is an attorney, by the way, and he opened up his company called evictyourtenant.ca, and he has worked as a adjudicator as well for a year. He's supposed to come in. Maybe there's something happened. So we will skip it for the time being. This is all about Bill 60C. How quickly can you get rid of the tenants who do not pay? You don't have to wait very long. If you want to get your property in for personal residence, you give them 4 months notice and 1 month rent compensation. So these are a few details. Those who want to know it, I have some details of it, but I prefer that somebody like who has uh, who has experience, who has designation, who is authorized to speak about it. But in case if you want to know more about it, will ask him if he can come in the next time. So before we go any further, one of the partner we don't like is the tax man, who take about 42% of an average Canadian's money. And then other people come in, the property tax, sales tax, income tax, paycheck, and then you got the mortgage interest, and then you got land leases and all the stuff. So by the time we make money and we bring it home, a lot of people want to share the money with you. So what is our tonight? We're going to be talking about, sorry, tonight we're going to talk about something which a lot of people are not aware of it, and it's all about the notice of non-compliance. And this is how they can come and audit you. So to bring us, enlighten us, we're going to be talking to Sherry Hogan. He's one of the only Canadian licensed in all 5 sectors. And Jerry, are you here, my friend?
I am. Can you hear me?
Yes, we can hear you loud and clear.
Awesome. Hope you can see me too. I don't know if I
We
don't see
can see
myself
you.
on here.
Yes, we can see you.
Yeah, a new tool coming for CRA called Notice of Non-Compliance. And here's a little history. So, as we all know, and certainly based on the discussion we just had with Terry and Yossi, um, the government is just going to continue to tax us to death. Okay, they need more and more and more of our tax dollars. Um, What's not work, some of the tools they've used in the past are not working, i.e., an increase in the tax rate. The tax rate is pretty well as high as it can be. If they try to if they try to increase the tax rate, it's political suicide. So they really can't raise the rate. Then they went and tried to add income inclusion. Okay, so if we can't change the rate, let's add income to the existing rate. And particularly when Justin Trudeau tried to do the 2/3 capital gain income inclusion. And what happened there? The people rebelled, he's gone. Okay, so they can't really raise the rate. They can't really add more things that are taxable. So what are they doing? They're going to nickel and dime and fee us to death. Okay, and they're starting with this what we call notice of non-compliance. So what that is if CRA asks for something. So when we file a tax return, we get a notice of assessment, and they have 3 years from that date of notice of assessment to audit or make any inquiries on any of the items that we have filed. Now, what's going to happen is if they send a letter saying, "Hey, I'd like to," you need to send me the auto receipts. And the minute we're late, they charge $50 a day for non-compliance. So that's their new revenue tool to get more tax revenue from everybody. And something tells me they're going to be asking a lot of people for a lot of expense verification. And most people will just be somewhat non-compliant or certainly non-compliant on a timely basis. And it will start costing them a lot of money. Just like now, they're making a lot of money just on interest on outstanding tax payments, on penalties for filing late. So they're really getting into the fee game, and this new notice of noncompliance is a big step towards that. So what's the message? The message is basically forcing us to be more compliant, filing our taxes on time, providing the information they require on time. So they're really be coming down with a heavy hand, a heavy stick. Certainly not communism, but they're certainly positioning themselves in even more power than we've seen them have in the past, demanding information from us. So that's coming at us. Fortunately, they gave, I think might have mentioned this last time, the UHT, the underused housing tax, that's gone. Surprisingly, very surprised that was brought in with the Trudeau government. Carney has literally thrown it in the garbage pail, and that's really good news because I've never seen I've never seen legislation more confusing among the accounting community. When this came out, I belong to a network of like 400 accountants, and we're always sharing information, sharing thoughts, sharing ideas about new legislation. There was so much confusion around that UHT. So for it to land in the garbage pail is very good. With that said, there is still a legal requirement to file the UHT for 2022, 3, and 4. And I'm kind of curious what they're going to do about that. Hopefully nothing. Hopefully it just goes away. But they might just use this notice of non-compliance fee for the UHT for 22, 23, and 24. So keep your eye open on that. The other thing they did was the trust reporting. That has been pushed into 2026, so we don't have to worry about that for 25. Certainly didn't have to for 24. So that's good news. But yeah, get ready. CRA is going to nickel and dime us to death with these little fees. So that seems to be their new game. That's coming at us.
So what's the best recommendation for when we receive a letter like this from?
Well, I mean, you just when there's a request for information, you have to take that seriously. There are deadlines with that. You have to take that seriously. Certainly as a public accountant, we live in a very deadline oriented world. Where a lot of the filings we do are deadline based. And sometimes it's very hard to adhere to their deadlines. For example, the deadline to file dividends for a corporation is February 28th. We probably have 350 to 400 corporations that we have in our client base. Probably three-quarters of those have December year ends. So let's say 300, we have to do 300 corporate year ends in January and February in order to comply with the February 28 deadline of filing dividends. And that is just impossible. I mean, these deadlines are impossible for us. And I'm not alone. Many of the accountants have the same concerns. So, they're nickeling and diming us. They're going to make these deadlines. They already are unrealistic, some of them, and they'll probably make them more unrealistic. So, just pay attention. File on time when we get notices. You should also do and keep up to date with your CRA account. Okay, everybody has a My CRA account. Go into that account, make that a regular routine. See what's in there. See if there's any notices. See if there's mail that's on your CRA account that you may not have received in the mail or whatever. That there's a lot of information on your the personal one is the My account. Any business accounts you have are my business account. So Just, be a little more vigilant on what's required from CRA. Really is my message.
Okay, there's one question on the Q&A, by the way, if you can look at it,
Where's that?
right at the right hand under the more section.
For some reason, I can't get that. I don't know why. What can you read it to me?
Yes, sure. CR income verification for mortgage, is it connected now?
Sorry, CRA which?
Income verification for mortgages.
Oh, income verification. Oh, yeah, no, that's in use. So basically, what the mortgage industry is trying to do is to get access to our CRA accounts, and can't really blame them. So someone goes for a mortgage. Um, the mortgage company wants verification, CRA verification. Usually the client calls us as accountants, hey, can you provide all this income verification for the mortgage broker? It's kind of a pain for us to be providing the information and the work that is, to be done by the mortgage broker. So I know the brokers are trying to get access to that, the clients, my accounts at CRA, and I fully endorse that. I hope it happens. We get dragged into so many mortgage applications just to provide information that the client already has. It's just most clients find it easier to call us to get all the information that the mortgage agent or broker is looking for. So a little bit of education out there as far as how that information is accessed would be very helpful.
Great. Thank you, Jerry. Appreciate it. Those who are
Yeah.
looking for an accounting, the person who's an accountant himself is also a real estate investor. Please get in touch with Jerry Hogenhout, 416-979-7426. Canadian Investment Services.ca is a website. I'm sure you can see it on this slide. Okay. Thanks, Jerry. Appreciate it, my friend. Have
Thank you,
yourself.
Nat. Appreciate it.
Enjoy the sun, my friend, while
I
we are
will.
dealing with
Well,
okay. We're gonna be talking a little bit about Calgary. I'm not too sure. Ernie, are you here tonight? Vladimir, did you see Ernie at all or no?
No, I didn't see him.
Okay, no, okay, maybe it's not there. So the low sales in Toronto, we're gonna be talking about our good friend here, or my sister, about real estate, what's happened in Toronto, how the sales are doing, and how the market is going, where you should be looking into investing, and how many days it's taking for a condo to sell, and so on. I'd like to introduce you the #1 bestseller international author, speaker, publisher, and top-notch realtor, Randy Goodman. Are you there, Randy?
Thank you so much for having me, Navtaj, and thank you everybody for joining us tonight. I'm going to talk to you about 3 major forces shaping our real estate landscape heading into 2026. The Bank of Canada's upcoming rate decision, TREB's most recent Market Watch insights, and the newly passed Bill 60, which is reshaping the landlord-tenant balance in Ontario. Let's start with the Bank of Canada. Tomorrow, December 10, the Bank of Canada will announce its next interest rate decision, and markets are divided on what's going to happen. On one side, we're seeing clear signs of a weakening labor market. Economists know this pattern well. Rising unemployment and slow GDP growth are the classic triggers for rate cuts. Historically, when the job market softens for several consecutive months, the bank responds by easing policy to support the economy. But here's where things get tricky. The data has been mixed. Some months showed unexpected job losses. Other reports surprised to the upside. Economists are reading the same numbers and coming to different conclusions. What is consistent is that interest rate sensitive sectors, construction, real estate, and manufacturing, continue to show real softness. Unemployment is elevated compared to normal historical levels, and that adds pressure on the bank to consider further cuts. However, and this is the balancing act, the bank's number one mandate is still inflation. If inflation is holding closer to the target, rate cuts are easier to justify. If inflation is sticky, the bank will hesitate, and even if labor markets look fragile. So the big question is pause or cut. Some analysts think the bank will pause to see the impact of earlier cuts. Others think continuing easing into mid 2026 is likely. Tomorrow's announcement will give us more direction, but what's clear is this: the labor market is soft, the economy is fragile, and the bank is under pressure to keep supporting growth. Expect language that is cautious, measured, and highly data dependent. Now let's move to the GTA market, because the Trump Market Watch gives us the clearest real-time snapshot of what's actually happening on the ground. The latest data from November 2025 shows a market that is softening, not collapsing, but definitely adjusting. GTA Realtors reported over 5,000 home sales in November, which is down almost 16% compared to November last year. That tells us buyers are still very rate sensitive, and many are waiting for clarity from the Bank of Canada before making moves. We saw over 11,000 new listings in November, down slightly, about 4% year over year. But the big story is still the overall inventory level. Active listings hit about 24,500, which is up roughly almost 17% from last year. And this additional supply means buyers have more choice and the sellers cannot overprice and expect competition. The phase of the market is long behind us. On pricing, the numbers reflect a calm, cautious market. The average selling price across the GTA came in at just over $1 million, which is down roughly 6.4% compared to last year. The MLS Home Price Index, HPI composite benchmark, is down about 5.8% year over year. So again, not a free fall, but a noticeable downward adjustment. Condos continue to be the weakest segment. A lot of investor-owned units are hitting the market at the same time that carrying costs are remaining high. Treb notes continued pressure on both condo prices and demand, especially downtown and in investor-heavy pockets. Detached homes and freeholds are holding up better, but they're still experiencing softness. Buyers in this segment are picky, patient, and fully aware they have negotiating power. We're also seeing a slight easing in the rental market as more purpose-built rentals and newly completed condos hit the market. Vacancy is still low historically, but it's not as tight as the peak years of 2022 to 2024. So, and finally, Bill 60, which has officially passed, is already sending shockwaves through Ontario's landlord-tenant landscape. For years, Ontario has been known globally for being extremely tenant-weighted. Landlords were often left unprotected, facing months of arrears, delays at the LTB, and in some cases, losing their properties because they simply couldn't remove a non-paying tenant. Bill 60 brings a long-awaited rebalancing. Faster eviction times, less procedural delay, more clarity for owners, and fewer loopholes for abuse. It does not erase tenant rights, but it finally acknowledges that landlords deserve enforceable rights too. This shift is significant for investors because it reduces some of the systematic risks that made Ontario a difficult province for rental housing providers. But, as this is important, compliance matters more than ever. You must follow the correct notices, timelines, and documentation. And the system will move faster and mistakes will move faster too. So what does all this mean for us investors heading into 2026? Well, rates are likely trending down, but slowly. So don't expect a sudden return to cheap money. Expect gradual relief. Market activity will improve once rate certainty returns. The fundamentals are there. Buyers are simply waiting for direction. Inventory will remain healthy, and this keeps pricing moderate and creates opportunities for value-driven investors. And Bill 60 strengthens the rental investment landscape. For the first time in years, landlords have tools and that actually protect their assets.
Excellent.
And
Anybody got a
thank-
question for Randy? Anybody got a question for Randy? Or you can just type it in. Otherwise, you can call her directly at 647-284-7601 or randygoodman.com.
Thank
And
you.
if you're looking for a great bargain, I think this Christmas could be a good day. I'm sure Randy will be working. You're looking for a cheap condo or some sort of a house to develop. This is going to be a good one, by the way. Randy Goodman is the person, so you can negotiate much better for you. And we have other people who can assist you and help you. Thank you, Randy, once again. Appreciate
you.
it. All right, we're going to move on further, and we have some brutal truths. Okay, I want to go through this. Okay. Some of the brutal truths I want to share with you. I mentioned earlier, our sales are up. BC foreclosures are up to 119. This debt we had, apart from the mortgages, is also alarming, by the way. And again, the renewal class is up. As I mentioned to you, 60% of Canadians are going to be facing it. Rent over by revolution, again, this is something which is happening. The mortgage delinquencies are up by 63%. And I'd like to also share some other brutal truth as well to you, if I can get that stage. So the condo glut is going to create a problem for the time being, but in the near future, we may not have any new condos coming in the market. A lot of developers are not building anymore. Most of these builders are turning into purpose-built rentals. So right now, there may be tons of them available. 3 years down the road, 4 years down the road, we will be again lining up for those condos again. So boom towns like Vancouver, Toronto, now Winnipeg and Quebec City are the new ones who are pulling much better appreciation. I do believe Quebec is going to do extremely well next year based upon all the facts and figures. And one of the worst thing, in case you are happen to be one of them, if you got a line of credit against your house or personal line of credit, they are surging up quite a bit, and the banks may gonna take some sort of action. They may recall. Just be aware of it. Plan ahead of time. Speak to your mortgage broker, speak to your realtor, speak to mortgage lenders, or speak to even a lawyer in case you are in a situation where you need to downsize your expenses. Mayor Chow from Toronto want to increase the ultra wealthy tax to pay more luxury tax. Landlords in GTA are in trouble, or we call it shambles. Most of the insurance rooms are gone. $36 billion economy suffering. And as a matter of fact, a little news came out on the surface that even Brampton Transit got a feel of it. They lost $26 million before. Now they are lost revenue though. And we are building a lot less houses. Most of the builders, are building purpose-built rentals. And it's going to bite us down the road. And there's also fraud going on for those people who are dead, and their people are transferring their property to somebody else. There's a big scam going on. And one of the biggest questions I have for all of you, and you can give us a feedback if you like, is Canada going to slip into recession in 2026? Or are we already in a recession? Tough question, depending on individual, who you are, what you're going through it. It is, it's okay to be well prepared though. 6 months of emergency funding. If you're making some changes, it's okay. If you are doing some rentals, one thing I noticed that when we start doing rental for ultra well-paid tenants, that model works very well. I have somebody I know got a brand new one-bedroom condo, having difficulty renting it as unfurnished. And this gentleman furnished the unit and had no trouble renting in less than 3 days. As a matter of fact, he had got 13 applications, and he narrowed down to 4 people. And it has a tough, difficult decision. And people were competing by a couple $100. I think it's $50 to $100 more what this gentleman was asking. So in case you happen to, in a situation where you unfurnished unit, see if furnished unit could work for you. It may gonna bring a little bit extra cash. That could help for a lot of Canadian investors here. So this is another one. This is I'm not sure some of you heard about it. Prince Margaret lottery ticket. Really, they say you got the house worth 9 million, recently got sold for 4.3 million. Again, this is a questionable how they evaluate it, because when they evaluate the property with all the furnishings and so on, I do believe the value of the house was a little bit not exaggerated, but it was, yeah, inflated, I can say. Recently got sold for 4.3 million. Some of these scenarios in Calgary, as I mentioned before, some people from Ontario went to Calgary. They tried to overdo it, and they bought this particular property in Northwest, tried to upgrade it, and it did not go well. As a matter of fact, it backfired. So you got to know exactly, hey, how do you add the value? Renovation means nothing unless otherwise you add some value, which can be shown on your monthly cash flow, or it can show in the value. So how do you add value? Most of you, if you happen to own a single family home, you want to add up a garden suite. That cost could be about 165 to 250,000, depending upon where you are. If you happen to be in Toronto, you add up a 2-bedroom garden suite. It can bring you about 2,500 to 2,750 per month, 2-bedroom. The cost is, let's say, 250,000. It still makes sense. In other places, it may not make sense because the rents are $1,100 or $1,500, and the cost to build one, it does not justify. A lot of Canadians, investors, have focused and shifted their energy to we call purpose-built conversions. Again, it's not for everybody. It takes longer time. You need a lot more capital. It takes a year and a half, 2 years to 3 years. We have a builder. I'm going to bring him in the meeting. And what they like to do, what they like to offer you, something which you can say hands-off approach. You can start with about $300,000, and they're going to give you a finished product worth about $3 million. And by the time the product is ready, you would have approximately $1,000 cash flow. You got a brand new build, and you may not even have any of your money in the building. So the whole process takes about a year to a half. And one of the most hottest way of investing in real estate for next 10, 20 years in Canada will be building rental for seniors, not assisted living, for seniors only. So what's happening with boomers like me, born after 42, after Second World War? Now we want to downsize. We don't want to live in a house anymore. and we don't want headaches. So a lot of boomers, what they want to do is sell their houses as quickly as they can. Some of them will do vendor take back mortgages with you. Some of them will help you assist, give you good terms, a good price, and in exchange, they could be turned into a great tenants. They'll still be living in the same house as long as you are adding up more value, as long as you could get positive cash flow. So there is a hidden opportunity for most of you. So what's the opportunity? So you advertise or you start talking to people, even realtors or everybody else, say, listen, I'm looking to buy a couple of properties. I don't have much capital, but I want to do is conversion and turn a single family home into 2 units, 4 units, 5 units, whatever the zoning allows you to do. And if you can utilize the current homeowner's equity and you can give them a space and they can eventually turn into your tenant, that could be a great win-win situation for you. And first and foremost thing, the homeowner asks the same question, what's my security? Sorry, your property is your security. Now, there's a little bit more into it, this strategy. There's little steps you need to tweak it in. And once you have a good understanding to it, you have your numbers ready for it, figure out the numbers inside out. You can't just jump in. For example, we see a piece of property in one of the very nice neighborhoods in Toronto, which is close to Bathurst and Finch. It's close to Hull Hospital. It's not too far away from a couple of colleges, public transit, hospitals, doctors, medical centers. And that property was sold for approximately less than 2 million. It's for like 1.95 million. Now that property is available because somebody bought it hoping to build it. Now they are in trouble. So you can pick up this piece of property for, let's say, 1 million or 1.2 million, and it can be easily converted while keeping the existing house, and you can add up 4 more units. And can you ask the help from the owner? Absolutely. Now, one thing we tried, and we are still working on it, it worked in the past, where we asked the owner, when you sell a piece of property to you, do you need to pay all the money or can you pay in installment? Can you make a balloon payments? So in this market, you can be super creative and your creativity may gonna stick. And that could be great for the long-term investments though. And that's just a simple strategy, but again, this market is full of opportunities, tons of them. As an investor, you can come up with something creative where you can take off responsibility from other people. You could be making big in this. I'm going to just share a couple of things. Real estate is up. Halifax, I'm going to stick with this one. Okay. This one got sold, lost for 700,000, 1.7. So this is what I'm talking about here. Property sold for 1.7, or selling for $1 million. Mincing Trail, Marmion Build Home. It's a good builder, by the way. It's a not huge house, but it's still a good house. And check it out if it makes sense for you. A couple of one I would like to share with you. This is another one. This is what I managed. Similar situation here in Patricia Avenue, which is if somebody's supposed to build a dream home, or you can build 5 units there. It got sold for 1.6. Now it just recently got sold for 1 million. And it's a great price, in my opinion. And if you build it, it'll cost you 2 million. You got a $5 million worth of property. Not 5, it's at least 4.5. It'll definitely give you positive cash flow. How long is it going to take to do it? Maybe a year. Is the financing available? Yes. Can you go to a CMLI program? Yes. So we'll be talking next few months. We're gonna bring a mortgage broker or brokers who have done few deals like that and see if they can lighten you. Can you buy these properties with a 5% down, 10% down? And can we assist some of you? We will recommend you only. You have choices to work with the different builders. And I might like to bring few builders once I check them out, and they can share some of this stuff. Hey, this is what we do. This is the time frame, and we have built more than 50 properties already. Exactly what we can offer you. This is our track record. And if you feel comfortable, get your attorney, get your realtor, everybody in and see if that makes sense for you. Or you just want to copy and paste. Entirely up to you. Again, this is a time to build definitely a good portfolio than anything else. This is something about Waterloo, 50% is gone. People paid $525. The bloodbath going to continue for another year, in my opinion, especially the condos, as long as they make sense. So internal students are gone. It's a big, huge rental vacuum, humongous, and there's a cost of paying it. Like they used to bring $35 billion of stimulation to Canadian economy, but again, this is what it is. That's what it is, though. This is another one. I believe this is in Crawford. Yes, this is another piece of property where people paid $2.1 million. They want to renovate it. Didn't know where they find that they overpaid for it. Anybody who have invested at the peak are losing almost 1/3 of the equity, at least 1/3. And unless otherwise they have the holding power, this is very unfortunate. All right, those who are seeking for a quick 15-minute coaching call, please give us a call. We'll book a time before 20th of December. Then the office will be closed for a while. I want to say thank you very much for everybody for being here tonight. Thank you all the speakers and experts. And anybody have a question, please feel free to ask. I believe we got a few questions here. Do you provide support to people from condo purchase? Yes, you can speak to a lawyer. You can speak to Jyoti. I think that would be a good start for you to speak to. Unit door unit is not perfect. I'm sorry, Mazur, Moini. Please, you can give me a call. I didn't get to understand what your question is. I'll be more than happy to answer this question for you on one-to-one basis. Thank you, everybody. And whatever you do, Happy New Year. And we look forward to see you in January 13th. Take care and God bless. Bye for now.
Thank you.
Thank you once again. All right. Thank you, Vladimir, Jyoti, Pete.
Bye.
Thank you to also Leonard.
Thank you. Thank you,
Good
Navtaj.
night. Good night, everybody.
Good
Good
night,
night, Navtaj.
everybody.
Good night, everybody, sir.